Welcome to Chapter 8, Learning Objective Number 1. In this video, we learn about just revenue recognition overview. We're going to start with the two basic issues that are involved with revenue recognition. The first is timing. We have to decide when we recognize the revenue. The second is measurement. How much do we actually recognize? These are the two biggest issues, and they drive a lot of the revenue recognition rules. In the last few years, US GAAP came forward with new revenue recognition rules. There's a 5-step process. We're going to learn about the overview in this one, and then in the future learning objectives for this chapter, we'll learn about each one of these steps individually. So first, we identify a contract with the customer. Second, we identify the different performance obligations within that contract. So for example, if you have cellular service and you also have a phone, there's two performance obligations. You buy a phone, you have cellular service. The third step is determining what the dollar amount of the transaction price is. And though it seems like this should be fairly straightforward, it's actually far more complicated than we understand. The step 4 is allocating the actual dollar amount, the transaction price, over the different performance obligations. And the fifth step is actually finally doing the journal entries to recognize the revenue. And there's two major ways. You do it at a point in time or over time. So just getting a general overview of what's going on, we have the cellular company that sells the smartphones, each for $350. The 12-month service plan is $40 a month. That comes out to $480. Well, if you bundle the two, you get the service and the phone for $750. Okay, so what we're going to do is just talk about how this contract goes through the 5 steps. They identify the contract with the customer. There's two performance obligations, the smartphone and the service plan. In step 3, we figure out the transaction price, and this time it's fairly straightforward. It's just $750. When we get to step 4, we have to allocate so much towards the phone and so much towards the service. How do we do that? We use the relative fair values. So we take the fair value of the phone divided by fair value of the total, which is $830. Fair value of the service, $480, divided by fair value of the total. That gives us percentages. We use these percentages and multiply them by the transaction price. You're going to have lots of opportunity to work on this. We just wanted to get you a little overview. In the 5th step, we have to determine when do we recognize the revenue. Well, the revenue on the phone we get to recognize on the day that the phone is sold. So we allocate part of that $750 to sales revenue, and we recognize the cost of that phone to us. So those journal entries are shown. The unearned revenue is for the entire 12 months of the service plan for the cellular service. And as each month goes, they do it in quarters, they'll show the amount of revenue being recognized, and it goes from unearned revenue to service revenue. So we recognize the phone at the point of sale, and we recognize the cellular service over the 12-month period.